welcome. You're watching Last Take on Money9. I'm Sakshi, Batra, and this is where we recap for you the entire day's trading action, as well as let you know what really moved the markets today, as well as the factors that you will need to watch in days to come as well. Well, it was an unusual day for all of us on D Street who work with the equities, because we actually saw the Nifty trading halt for about 4 hours in trade today. There was a technical glitch that the NSE has talked about, because of which the trading was halted at 11:40 a.m. and the glitch continued, and the services could not resume up until 3:30 p.m. Of course, the resumption happened right after the closing hours, and there was an extended trade that we saw up until 5 p.m. this evening. Remember, the NSE rates had stopped refreshing early in the morning at 10:08 a.m. and Money9 was the first media organization to help you understand that this was a glitch that was being faced and the tickers were not refreshing. And that's when the news came out, and there was a wide awareness about this thing being happening in the dealing rooms among the trading community as well. And that's when the NSE came out with a tweet clarification about that, why the technical glitch had happened. And the NSE said, and I quote, that we have received communication from both the telecom service providers that there are issues with their links, due to which there is an impact on the NSE system, unquote. Now, when you see this kind of an technical glitch, this has happened even before. It's not the first time that the NSE has faced a technical glitch or the exchanges have faced a technical glitch. But for the first time, we've seen such an elongated glitch that has stayed at least in recent memory of the Indian stock markets, that the technical glitch has stayed for over 4 hours. Of course, the resumption of trade happened beyond 3:30. There was no clarification for a long time, and just before 3:30 p.m. we got a clarification from both the exchanges, which said that they will resume their trade up until 5 p.m. so that all the positions being taken by the day traders can be continued, can be squared off, because tomorrow is the FNO expiry as well. However, for this extended period of 1 hour, 1 hour, 90 minutes trade, no intraday trading was definitely, as announced, was allowed for sure. But after that, if you see, when the trading resumed on both the exchanges, we actually saw a sharp rise in the markets, and the markets, both the NSE and the BSE indices, they closed with sharp gains of up to 2% as well. Both the Nifty and the Sensex really outperformed. The Nifty Bank, in fact, outperforming with up to 4% uptick as well. Moving on to see how all of these indices really closed in trade. Yes, 50,000 was definitely achieved in this extended hour of trade. 50,781 for the Sensex at the closing level. That's over 1,000-point addition for the Sensex and 2% gains over there. Now, Nifty 50 also actually reclaimed the 15,000 level in this extended hour, but actually came off those high points of the day and closed just below the 2% mark uptick as well. 274 points gain for the Nifty 50 in today's trading session. Of course, the entire session was for the bulls, especially the last hour of trade. Nifty Bank definitely the outperforming index in today's trading session. 3.8% uptick, a sharp rise of 1335 points that was seen on the Nifty Bank index. 36,452 was the closing level of Nifty Bank as well. Apart from this, the broader markets also participated well, with the small cap index rising over 1% and 0.7% gains for the mid cap index as well. Let's take an eye out on the sectoral movers of the day. Of course, apart from the IT index, all other indices closed in the green, with definitely the private banking space really taking the cake today. 3.87% uptick for this index. Of course, the financial services participated as well, with 3.5% uptick over there as well. Now, the trigger for this was definitely the tweet by the finance minister's office, but we'll talk about that later. First, let's quickly check how the indices closed. And apart from this, if you see, the gaining stocks today were definitely led by the HDFC Bank stock that was up about 5.5%. Coal India, Axis Bank, ICICI Bank, Bajaj Finance. So clear cut, it was the banking and the financial names that pulled up the Nifty index towards the close of the session, up to 2% in trade. 3.5% to 5.5% uptick for all of these gainers on the Nifty index. Moving on to the Nifty losers then. You can actually see some stocks from the steel space seeing a bit of profit booking, IT space seeing profit booking, UPL Power Grid not performing, and Dr. Reddy is also slipping in trade. 1.5% loss for all of these stocks on the Nifty 50 exchange for today as well. Moving on. to now see which were the factors that really pushed the markets higher in today's trading session. Of course, there was short covering that we were seeing right ahead of the FNO expiry date, that's tomorrow. But the Finance Ministry's tweet on the embargo lifting of the grant of government business to private banks, that was a major trigger that really helped all the banks, rise up in trade in that extended 90-minute time or duration. We actually saw most of the private banks really rise in trade, and that index pulling up the Nifty bank index for sure. Now, what this really means is that the government has lifted the embargo for all the private banks to do any kind of business, transactions for the government as far as the taxes are concerned, the revenue is concerned. So the private banks will be able to participate in any kind of government transactions now, apart from the PSU banks as well. So big thumbs up for from the private banking space to this information that we've seen from the government today. Now, moving on to the primary market space update as well, here run by Industries. IPO has got a good response so far. If you see, it has been subscribed over 2.74 times so far. The issue will actually close on Thursday, that's tomorrow. But already we have seen an oversubscription on this one as well. Moving on to which will be the factors to track in tomorrow's trading session. Remember, it's the FNO expiry for the series of February, and we'll have to see how the trade really follows. Remember, the volatility has been, spiking for the last 2 or 3 trading sessions, and we'll just have to see whether that escalates in tomorrow's trading session as well. The FII inflows have actually got reduced in the last 2 trading sessions. We've seen actually sell-off from the foreign institutional investors of about 1570 crore rupees, worth of shares that were pulled off from the equity markets in yesterday's trading session. Of course, 1800 crore rupees were sold in the previous day as well. Now, global cues will be very important to track. Remember, the extended trade in the Indian markets has seen a surge, but that's largely due to the domestic factors. If you see the global cues, the European markets have been trading down, and the futures of Dow also have not been showing any great kind of an up move, which actually could be taken up for the Asian markets in tomorrow's trading session as well. So tomorrow's session will be very important to track as far as the global cues are also concerned. So with that, we wrap up this edition of Last Tick for you. A whole lot of coverage on the personal finance front to take place. So stay tuned with us on Money9.